What's up, everyone? It's Scotty with Money Investing, and markets here pulling back a little bit on the day. The S&P 500, the Dow Jones, and the Nasdaq all red. However, the Nasdaq, I believe, is green on the week, and S&P and Dow Jones are pulling back. So in this video, we're going to break down the economic numbers that came out, the consumer sentiment numbers. We're going to talk a little bit about the market update, the Fed funds futures, and of course, talk about the technicals as well. Inflation is out of the way, unemployment is out of the way, and the Fed meeting is out of the way. So markets are already understanding of the fact that most economic data and even earnings are out of the way. And moving forward, there's not going to be a lot of things to focus on except for the upcoming earnings of Nvidia and some of the other companies that are left in the earnings season. And then, of course, not to mention, we've got the debt ceiling debate still going on at this moment. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. There is a 16% discount that is available on an annual basis for a limited time, and that does expire at the end of this month. You'll get access to all the alerts, all the benefits, all the live streams, and I also did sell covered calls on AMD and on Meta to hedge my downside for this very reason, that the big tech or tech in general can start to lose some steam on the upside, and they are doing well. They are up a little bit. So they are up a little bit over 57% for AMD. So we're going to be closing these out on Monday or Tuesday if AMD continues to pull back. So that's that. And then Meta needs to drop a little bit more in order for it to be more profitable. Right now, it's only up close to 11%. So again, if you want to get access to all these alerts here, link's going to be down below if you want to join and of course be a part of our money investing community. And of course, get access and take advantage of both options trading, swing trading, and of course, investing, long-term investing as well. So this was the state of the markets. S&P here down a little bit over 16 basis points. Nasdaq's down 36, and the Dow was more or less flat. So again, it was kind of like a balanced day with about 1,900 stocks here selling off between 0 and 2%. We got, about 1,700 stocks pushing higher between 0 and 2%. And again, very, very split market with some stocks pulling back, some stocks advancing and pushing higher. So consumer sentiment came in very, very weak. So we are looking at a 57.7 print on the consumer sentiment versus the consensus of 63. And that makes a lot of sense because what we're really seeing is the banking crisis and everything that's going on in the economy. And as a result, consumer sentiment came in very, very weak at 57.7, and that might be one of the reasons why the markets did pull back, but I don't think that's going to be it. And again, markets are chaotic, right? There's a lot of variables at play. Markets are complex, so it's really irresponsible to pinpoint the markets sell-off or markets rally to one single data point because there's a lot of things at play. This right here, again, S&P 500 closes lower, not just a second week of losses following disappointing consumer sentiment data. So again, I don't think that's only the reason the markets are selling off. Joe Cusick, portfolio specialist and senior vice president at Calamos Investments, says, and I quote, "None of the sectors are making any convincing moves in either direction, reflecting a general lack of conviction in the market." Now that is very interesting, and we've talked about this before. The market is lacking breath. Right? It's that simple. Regardless of where inflation is going, right? Inflation is trending lower. That's good news. Great. That's fantastic. Fed funds futures are pricing in for rate cuts. That is also great. That is fantastic. But at the end of the day, we have to ask ourselves which sectors or which set of stocks are going to actually take us to the next level. They are going to actually drive us back to all-time highs. What sectors? It has to be a broad-based rally, otherwise the S&P, the Nasdaq, and the Dow cannot just go back up to all-time highs based on just a handful of companies. It can't be just about Apple, Microsoft, Meta, Tesla, Nvidia to take the Nasdaq and the S&P back up to all-time highs. It has to come from the entire market. And if entire market, the other sectors of the market are being neglected and they're not really seeing that momentum, then unfortunately, regardless of what tech does, we're gonna have a hard time, seeing that momentum for the market. So it has to be more broad-based, and as the rally sort of for specifically tech stocks for Apple and Microsoft and Nvidia, as we see the steam, as they're starting to lose steam, that's obviously gonna put pressure on the markets from more of a downside perspective as well. This right here again is the entire market. So Apple down, Microsoft down, Tesla down, Amazon down. Nvidia was also lower, AMD was lower. So you're seeing the companies that were pushing higher, making this market go higher, they're now starting to pull back a little bit. And Square and PayPal, once again, struggling, down 3% each. So utilities was the big winner on the day. Energy was up, and then materials were up, and then consumer cyclicals, financial technology selling off in the last 1 week. There's only one sector that's actually performed well, and that's your comm services, and that's only because of Google. Only one stock because of their AI, because of their mention of AI and generative AI for like a million times during their keynote speech. In the last 1 month, once again, comm services is the only sector, and everything else is selling off. Energy is down the most, over 8%. I've mentioned this before in my previous live streams, and at the beginning of this year, talked about how energy could be a big, nice, short opportunity for 2023 because earnings are not going to be as favorable as they were last year, and as a result, investors are going to try to rotate out of energy and go into other sectors, and energy is seeing exactly that this year. It is actually one of the worst performing sectors on the year so far. Natural gas, feeder cattle, wheat, cotton prices pushing up, with orange juice down, heating oil down, palladium, soybean, platinum, they're all pulling back. Bitcoin just hovering around 27,000, and Ethereum back over 1,800 at the moment. And this right here is going to be that Fed Funds futures probability with about 84% likelihood that we're going to see a pause in June, 60% probability that we're going to see a pause in July, and then a 48 majority percent probability that we're going to see rate cuts starting in September of 2023. So that's where we are with the market. Volatility here on the day was flat, up over 71 basis points, back over 17. And if you come over to crude oil, starting to pull right back down, which is good news. We're seeing crude oil come down. That's exactly what we want to see. That's going to put downward pressure on inflation in the months to come. And energy stocks, if you'll notice, they were slightly higher, slightly flat, but overall they have been selling off, or they are down on a year-to-date basis. So if you take a look at Chevron, it is down from its recent highs a little bit over 17%, and year-to-date the stock's down over 12%. Occidental, on the other hand, is down a little bit over 6.7% year-to-date. And then finally, ExxonMobil is also down, I believe, on a year-to-date basis, down about 3.6%. But more recently, from their recent highs, they are down over 11 to 12%. So we are seeing energy struggle a little bit, and I think this will continue if oil prices continue to come down. Eventually, we're going to see that be reflected in their earnings report, and it's not going to be as strong as what many investors maybe are pricing in or expecting moving forward from these companies. Now, talking about Ethereum very quickly, so just hovering over 1,800, and Bitcoin also starting to break down below this level. So we are now back under 27,000. So this right here is going to be that resistance, and support next is going to be at 25,000 for Bitcoin moving forward. Now, talking about the S&P 500, so again, what we're really seeing is a lot of consolidation sideways. So markets are not really interested in moving anywhere. So we are just trading in that range of consolidation, and this is a very strong resistance at 4,200. We're just not able to break past that level, with the support staying roughly at around 4,000, 4,050. And we're seeing a lot of indecision. We're seeing a lot of consolidation. And all this is happening because tech is either moving sideways or coming down now, and other sectors are either moving sideways or they're pushing up now. So that's what we're really seeing at the moment, because even today, you'll notice utilities was up, consumer defenses were up, and then technology, comm services, cyclicals, they were selling off. So really what's happening is, other sectors, more specifically technology, either moving sideways or coming down, and other sectors are either moving sideways or going up. So we're seeing a little bit of a rotation once again. And that's something that I asked you guys in one of my previous videos, right? In order for this to be a sustainable, more consistent rally, all sectors together need to participate, and the breadth needs to be broad-based, and we need to see more momentum to the upside. But if investors simply move down from tech and into other sectors, well, that's not a broad-based rally. Instead, that's a sector rotation, which creates a different dynamic for the market, more that's related to consolidation and more sideways trading, something what we are witnessing at the moment. Now, NASDAQ more specifically, obviously is still starting to break to the upside, or at least it's trying to. It's showing signs of a potential breakout because of the fact that it's very tech heavy, and it's now starting to break past 12,250, closer to 12,300. So going into next week, again, it's going to be very important, very interesting whether this momentum continues or if we start to see a bit of a pullback once again. And RSP, was flat on the day. Again, pretty much no move. Yesterday was a flat day. Today was a flat day, and on the week it is down 1.06%. Just goes to show that we are seeing, individual stocks really pull back, and as a result, take down the market with them. This is a very good indicator. This is a good index to focus on to have a much better understanding on just the overall market breadth and not be influenced by the different market caps and look at the indexes, whether they're higher or lower, because they can be influenced by the higher market cap companies. But this is a good indicator because it levels the playing field and it keeps everyone equal weight. And for the fact that we're down 1%, markets were lower in my opinion. Now going over to individual stocks here, starting with Apple, and Apple here starting to pull back a little bit, down 68 basis points. Not a surprise, 177 is going to be that resistance. RSI MACD overbought here on the weekly time frame, and on the daily showing some signs of a negative divergence. And it's going to be a question of how much higher is this company going to go, right? How much room of upside does it have left, right? Are investors going to continue to be optimistic with Apple as a safety trade? If so, 177 is going to be that resistance, at least for the near term now, and support level is going to stay put down to 157, 158. Talking about Amazon, and Amazon also getting up to its moving average here, the 300 SMA, I think that's the one, white line in the chart you see. And we're also getting up to that resistance at close to 114, 115. So this right here is going to be that level to also watch for Amazon. Now talking about Tesla here, once again, getting rejected inside this red rectangle. So we're not able to see that momentum or see that continuation for Tesla, despite the Twitter sort of a reins being passed over to another CEO, and Elon Musk is going to move down to a CTO role. But yeah, we're starting to see a bit of a pullback intraday, really selling off, down a little bit over 4 or 5% here on the day. So 167, 168 is where we're at, and we're still inside this red rectangle right now, trading in between 166 and 176 at the moment. So lots of consolidation sideways for Tesla. Next up, we've got Nvidia, and Nvidia here pulling back, also getting rejected at that resistance at 292, 293, something that we have talked about, and starting to pull right back down. So support level is going to stay put at 262 for Nvidia. So this right here is going to be that next support, intermediate support to watch. And of course, the earnings are coming up for Nvidia next week, I believe, or no, the week after that. So towards the end of May is when they are going to be reporting their earnings. Advanced Micro Devices pulling back, and that's one of the reasons why the covered calls are paying off, because that's the whole reason for selling those covered calls, is a hedge against potential downside. And if AMD starts to pull back once again, sells off a little bit over another 1% to 2%, 3%, then those covered calls will be up 70, 80%, and I will be looking to close those out almost immediately. So that's going to be the game plan. Support level is going to stay put somewhere around here at this higher low, and in line with that 200 simple moving average as well for Advanced Micro Devices. Talking about PayPal, and PayPal here down another 3.88%, hitting a new 52-week low and just a little bit over $61. There is no support in sight right now, so we just have to be patient. And I personally have to just be patient and let the sellers exhaust the selling pressure, and for the price itself to find a support before it can kind of stabilize a little bit, because right now there's literally no support for PayPal in sight, and it just continues to sell off even further. Talking about Square also coming down to that area of support here, somewhere around $53, $54. So this right here is what we are going to be paying attention to and watch for Square at the moment. And of course, resistance $50 at $59. That's been a level that we have been watching as well. But that support level inside this green rectangle is going to be very, very important for Square moving forward. It may suggest for a potential swing trading opportunity for Block. Talking a little bit about Meta. And Meta here pulling back a little bit, down about 84 basis points. So that was one of the reasons why the cover call was up over 10%. So getting rejected at this resistance at 237. So this right here is going to be that level to watch as a resistance for Meta, and support level is going to stay for roughly at 229 and all the way down to $223 for this company. Talking about Netflix and getting rejected at 348, 349. So this right here is the level that we were talking about in our previous video. So it's a previous resistance coming in since April of 23. And we're seeing a bit of a pullback from those levels for Netflix once again. Still very, very expensive in terms of the valuation. So I'm not interested in buying the stock at these prices. But support level is going to stay put at 275, 276 for Netflix at the moment. That's going to be in line with that 300 simple moving average. Talking about Google, and Google here once again continues to rally, continues to move up, and that's very solid. 87 basis points move to the upside. Next resistance and target is going to be at 123, and I will be looking at selling covered calls on Google as well moving forward, because of the fact that it's already moved up so much. We're starting to get overbought, and that's going to serve as a good hedge against potential downside. So again, if you want to get access to all those things, link's going to be down below if you're interested in, again, joining our money investing community and our Discord. And finally, we got Microsoft and Shopify. Microsoft here, once again, consolidating sideways, very much in line with NVIDIA and what we are seeing right now. A little bit under $309, and support level is going to stay put at $292 for Microsoft at the moment. And the last but not least, we have Shopify starting to pull back a little bit, so that's good. Support level is going to stay put at $54, $55. So this right here is going to be that next support. Definitely a little bit on the overbought side at the moment for Shopify, and resistance next target is going to be at $75 per share. But I do expect a little bit of a pullback from Shopify, maybe coming down to $54, $55 before making that next leg up for Shopify once again. So that's where we are. Hope you guys enjoyed this video. And overall, the markets are very much in this indecisiveness with respect to the markets in terms of inflation, interest rates, and more importantly, in terms of momentum. Tech stocks, as they continue to move up, they're going to at some point eventually lose out on the steam for more upside momentum. And then the real question is, can other sectors compensate for that lost steam, and can tech continue to trade sideways while other stocks move up and catch up to them, thereby increasing that probability of a momentum for the entire market and entire rally? Or if technology is going to see a bit of a pullback and the money is going to rotate out of tech into other sectors, and that's just going to lead to sector rotation, and the market's going to continue to trade sideways or lower. So hope you guys enjoyed this video and find it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. There is a 16% annual discount that is available until the end of this month. As always, happy investing. I'll see you all in the next video.